This is Charlie giving you Friday's market commentary. Hope you're very well. No live trading today because I'm actually recording this Thursday evening. It's 5:07 in Thursday evening, and I'm away all day Friday today. I'm over in Ireland, so I can't do any live trading, unfortunately for you. And I would have done one and recorded it today, Thursday, as I'm recording this, but Kim and I were out for a large portion of the day this morning today, so I didn't have a chance to get all the trading equipment on. Actually, I did get some trades in early yesterday morning, Thursday morning. But anyway, let's get on with this. Now, we've got something which is quite interesting here. Let's look at the S&P to start off with, because we've put in what we call a key reversal day here just this week. And so first things first, what is a key reversal day for people that don't know? A key reversal day is a day that makes, here's the prior days, that makes a new high but then closes, so the close here closes below the low of the previous day. So it makes a new high above the high of the prior day and then closes below the low. So let's come over to here so we can see that the S&P did just that on Wednesday. So it made a new high and then closed below the low of the previous day. So let's have a look and see if we got that. It was just on the S&P, if it was across the board. The Dow did the same thing, as you can see here, and I believe the Nasdaq did as well. Yeah, the Nasdaq did as well. Now, ironically, the last time that that I spotted one of these when we were in a nice bull market was back in October 2007. Now, I'm not predicting a massive move down because I don't see that, but what I do see is some sort of move lower. Now, obviously, on Thursday we did get some follow through to that. And I'm recording this live, so obviously the S&P is still moving at the moment, and as you can see, back to the S&P, it's obviously been lower, and as you can see, there you go, it just chunked up there because it's been lower during the day, and at the moment it's come up a bit. But I do see this as an opportunity for some traders. They may see this as an opportunity that usually when you get a key reversal day after a big run, then normally there's an opportunity in that price may, quite often it'll do this. And I remember back in October, and a lot of you who have been with us a long time, October 2007, I was doing the video update and I said, well, I'm going to short this, and I remember we shorted it the following day. So we went down to the hourly charts, I think it was the 30-minute chart, and we shorted into like a 50 period moving average. This is an hourly chart here, and the price the following day rallied into the 30-minute 50 MA, and then I think it rallied a little bit further but never got to the highs, and then it rolled over and we had a nice run all the way down to the daily 50, and I was feeling very pleased with myself. And obviously several months later, when we realized that that was a major high and we were in into a major bear market, you think, oh, okay, yeah, I had a nice few hundred points, but it could have been a lot more. Anyway, I'm not predicting that, but I do think that the probabilities are there that there could be a little bit more downside yet to come. And actually, if we bring up the comparisons, and I've taught this before as well, if we come to, first of all, if we put T2108 on, as we can see, T2108 is the number of stocks or percentage of stocks on New York Stock Exchange which are trading above their respective 40-day moving averages. And as you can see that if I can move the charts, did we have a divergence as we hit those highs? Yes, we did, because we can see we made the high on the T2108 here, and then we made a lower high here, so we got a divergence in that. And I've taught this indicator before, so we got a divergence there on that one. Let's now have a look at the T2107, which is the number of stocks trading above their respective 200-day moving averages, and it's very obvious on this one. You can see that back here there was a lot more stocks trading above their respective 200-day moving averages than there were just as we made these new highs. So again, we've got divergences in play there. So I think that a lot of you are going to want to keep your eye on these the main stock market indices, because there may be some more downside to come. So you're going to want to go down to your intraday charts and then look over the coming days and then sit and wait and see. And the easy way to do it, you've got two options. You could just short it when it gets up to the likes of the hourly 50 and then put your stop at the high. For some of you may say, yeah, that'll do me. And others may say, okay, well, I'll let this rally if it is going to roll over, I'll let this rally peter out, and when it starts to roll again, then I'll start using things like our momentum indicators to then get short and then put a stop up, and then try and run it. But I think then you want to come out to your daily charts, because if it does start to do that, there's some decent downside potential, ultimately back down to the 50-day moving average, I would say, at least. So I think there's some decent potential there on the stock market indices. We'll have a look at the FTSE as well. Let's have a quick look. And I mean, the FTSE, I haven't got the full. This is not live. This is obviously Wednesday's data. I'm recording this Thursday, so but I know the FTSE's had a down day today as well. So FTSE would pretty much track those. So hopefully that's going to be of use to you. Some analysis there on those main stock indices. Let's have a quick look at a couple of the currencies, and then we'll call it a wrap, I guess. Oil by the way is. It's backed off a bit today, but I'm still keeping my eye on that. That pattern is still there, so I'm still keeping my eye on oil. Let's bring the oil up if I can see it off my screen. So it's backed off again today. It's come down to 92s, 93s. So what's it done again? It's got back into this zone again, and it's backed off. And it's come all the way down to here, but that's fine. It can still come up again. Yeah, I'm still waiting for it to get into, like I said, to break that 97.50 zone to 98. And if we can get into that upper zone there, then I think it's going to go. I thought it might have even gone this time, but it hasn't. It's backed off again. But it's coming. It's building, and I mean, hopefully it. From a personal perspective, I hope it goes down, because it means our petrol's cheaper at the pumps. But if it does come up again, I think that's going to be it, and it's going to go. So definitely want to be keeping your eye on oil still. It's just building and building and building, and we'll see if that's going to actually play itself out. Let's have a last look at cable and euro. Cable got some nice trend channels here. Obviously we broke this rising trend channel a while ago. Now we've got this trend channel here. It shows it a little bit easier on the hourly chart. So if I just zoom out a little bit, we've got a lovely trend channel here on the pound. And so at the moment, going into tomorrow, I was just talking about this in our trading room, I see the potential for a bit more upside. So for the pound, a bit more upside potential, a bit more rally. The beginning of the week, I was doing the recordings on Monday, and I said we might have a bit of a bounce, and we had a bounce on euro, and then I think a small bounce. Cable hit its upper bands, as you can see here, just where my cursor is. It hit the white bands and then rolled over. Euro didn't get to hit its upper bands, so it had a little bit more of a bounce, I believe. Where was it at the beginning of the week? Yeah, it's been bouncing most of the week, and it hit the upper bands, and then had a nice run yesterday. Had a spiked into the 50-day moving average, and then rolled straight over. Now it's come straight back up. So euro is just a little bit less clear, because it's already hit that target. So I'm not too fussed about euro. Lastly, we've got Aussie dollar, the Australian dollar, which is interesting at the moment, because we have actually got quite a nice divergence in place here and here against the RSI. In fact, when I bring up that chart, if I can remember the template, not that one, must be this one. There it is. If I put it onto a daily chart, there you go, a nice sharp divergence. So the RSI, the price low here, RSI was down here, price has gone lower, much higher RSI, a really nice divergence with a reversal type candles. It's had a lovely run down. I think there could be a little bit more upside, but what could happen first, got to be a little bit careful, is that it may just want to come dip down to the lower bands, and that could happen Friday. That it may want to do that, so just keep an eye on that one intraday. But overall, going into next week, I see a little bit more of a bounce coming. So it may faff around for a couple of days or so, but I do see it coming back up again. So keep your eye on Aussie dollar over the coming days. Anyway, that's me done. Have a fabulous bank holiday. Don't think I'll be doing a video up commentary on Monday, because I won't be around. I don't know, we'll see. Anyway, have a fabulous one, and we'll see you back in the middle of next week.